I'm pretty sure it sends jitters down your spine if someone tells you to invest in the oil and gas industry, especially in Malaysia. With the cases of Serba Dynamic and the PN17 status of Sapura Energy, I'm pretty sure a lot of investors just want to stay out of the sector altogether. But are they undiscovered gems? Are they companies that are well managed, have a healthy balance sheet, that are within Malaysian shores that you could probably take a look at and, because of such low valuations today, probably invest in them? Well, in this particular video, I'm going to look at one company that just recently had analyst briefing, which I was very privileged to join. And I'll share some insights about this company, how they plan to pivot, strategize going forward. And we had quite a good session with the CEO, Mr. Raman Rao. So it kind of gives you a hint of what company I'm going to cover. And stay till the end as I share some of the insights that he was sharing at this session. Hi everyone, my name is John, and in this particular video, I'm going to share with you some insights I got from attending this analyst and management briefing done by Deleum Berhad last week. Some pretty interesting directions that the new CEO, Mr. Raman Rao, wants to bring the company towards to. Certain tough questions about capex expansion. So stay till the end. So I'll give you all what I think, what they said, and how you can build better mental models understanding this business. As a disclaimer, at the point of this recording, I do not own any shares in Deleum, and this video should not be construed as a buy or sell recommendation because I'm not a licensed fund manager. If you do need license advice, please go look out for one who is licensed, and hopefully you can build better mental models to make that decision yourself in investing in this company. So first off, before you invest in any business, you try to find out what do they do and how do they generate revenue. And one of the shortcuts I always use is actually subscribing to a financial data service provider, and someone like Ticker just does the job for me. Fantastic 60,000 listed companies global data set. I've tried a few financial data providers before, and I think this one checks a lot of the boxes. So in we go. Straight away I type in Deleum. Okay, and you can find that they are listed on KLSC. So on the left columns, you will get tabs that says like company overview, Deleum news, detailed financials. So I'm going to go through some of the most used features that I do what I call a quick 5-10 minute kind of overview research before I decide to dive a little bit deeper. In this case, I'm going to hide the chart. So I don't get, I get a full screen to see what are the things inside here. So company overview, it gives you a quick glimpse within one paragraph of what Deleum actually does. So it's 3 divisions: power and machinery, oil field services, and integrated corrosion solutions. So if you want to know the contribution from each segment, the beauty of Ticker and one of my favorite features is actually when you go in under detailed financials, the 3 financial statements are there. There's a tab on ratio, but if you go to segments, and this is where the magic happens, you will see that the revenue segmentation by business unit is actually given and typed out for you. Obviously, this is no substitute for going to the annual report and getting raw data or what I call primary data yourself. That's always the best resource. But this gives you some sort of a quick and dirty solution, if I would say, to help you understand what are the big business segments that actually contribute to a particular listed company's revenue. And in this case, you can see that the power and machinery actually contributed the largest chunk, 391 million. Of their financial year end numbers. It's a good 40%, right? Or more? No, it's actually more. I think 400, 500, it's close to 50-60% actually of their revenue. And in this case, particularly for Deleum, let's see whether they generated a profit, in good years and bad years. So if you want more data, you actually just drag this. You can actually see more years of financial data. So we just drag it all the way to 2013. So that gives us good at least 10 years of data. So as we see, revenue has been growing even in a bad year in COVID. When COVID first hit, oil and gas, the demand for oil and gas actually dropped quite substantially, but they turn out profitable, right? 29, no, it's all the way down here. Net income, yeah, bad year, 7.3 as compared to 33.3 the year before, but as expected. But they still turned profitable, you know, for an industry that was really badly hit because of COVID. So looking at this, yeah, you can actually, the beauty of Ticker as well is you can actually plot the numbers that you want. So I've just accidentally clicked, I didn't want to click this, but let's say I accidentally click this, so I will remove it. Let's just say if I want net income, I'm going to click this, and I'm going to compare that to cash flow. And did they had a positive operating cash flow? Yes, they did. Even in 2020, when it was a bad year, they had a positive cash flow from operations of 98 million. Wow. Interesting. So, yeah, knowing their cash flow positions are pretty healthy, let's go and quickly take a glance at their balance sheet, right? Let's look at their balance sheet. Do they owe a lot of people money, or are they in a net cash position? Okay, so cash and equivalent 203 million. Wow. Okay, what was the market cap again? Let's go to company overview. Okay, and you can see that the market cap is 320 million. And if you remember, cash just now was 200 over million. You're talking about what? Close to 60% of their market cap is actually in cash. Or actually more than close to 70% of market cap is actually in cash. Wow. So very strong balance sheet. For those of you who are invested or know Deleum, they actually have quite a high dividend payout. I wasn't too sure. I've not been invested in Deleum before, so let's verify that. Okay, so what is their dividend per share? The payout ratio. Okay, so here you go, payout ratio. They pay out, wow, on average a minimum of about 30 to 40% of whatever they earn to shareholders. So kind of like a value play. Because whatever profits being generated, probably about 30 to 40% is actually distributed to shareholders, right? And I think that's one of the reasons why they were conservative and keeping a lot of cash, on standby to pay shareholders, because they've been expecting it year on year, right? As a business, let's go back, let's dial it up a little bit and try to understand their business. So power and machinery, let's see. Let's go to Deleum's website and see whether there's a pictorial form of what their power and machinery does. So we go to their website, and under core business, okay, so you've got oil and gas equipment and solutions, industrial power generation, turbo machinery services, valves and flow regulator services. So these are the 4 sub-segments of the power and machinery business unit. So let's choose one, oil and gas equipment. Okay. As you can see here, it says gas turbine packages for power generation. Okay. Now, just for some context, in a previous life, I used to deal with a lot of solar turbine equipment. That's why I know this company called Deleum. And what they do is they supply gas-powered turbine generators to generate electricity for offshore oil and gas facilities. And we, as facility design engineers, we use them to power our production equipment, to power the living quarters, because it's unfeasible to pull an electric cable all the way from shore all the way offshore to generate electricity. So we generate them on offshore ourselves by buying these kind of turbines. And they are the largest provider for what I deem anywhere between 1 to 23 megawatts in Malaysia, because of certain agreements that Petronas actually has. I think it's a little bit of injustice to describe everything in this video, but in a concise manner, they kind of have a monopoly on supplying all these gas turbines for this power range. Okay, yeah, that's the main contributor of revenue. So let's look at the other ones. Oil field services. Okay, let's go into oil field services. So how does oil field services look like? So here we go. Slick line and well services. So whenever you drill a well, you do need to do what we call some intervention, meaning if you want to open or close a valve, you want to measure something in the well, you definitely need slick line and well services to actually go in and to run what we call lines to actually either open or close a valve, or measure something. And Deleum is one of the leading providers. They're actually, I think at the point of the analyst briefing, they were saying that they command more than north of 50% of the market share for Malaysia's slick line services. So yeah, quite a monopoly. I mean, probably even if the closest competitor is like 30-40%, that's, they still have quite a big monopoly, right? They also do asset integrated solutions and also special chemicals. Yep. But I think Mr. Rao during that management briefing was going on and on about slickline services, because you have to understand, he's an ex-Halliburton guy. And Halliburton, while they don't do slick lines anymore because it's kind of like a low margin, a little bit low barriers to entry kind of service, I think the dominant players are the Malaysian players like Deleum, like people like MCTO, under Reservoir Link. It's a listed company as well. So these are the guys that provide these kind of services within Malaysia. What is the third business? Okay, so we've got integrated corrosion. And integrated corrosion really is about trying to ensure or preserve the material lifespan from corrosion. So offshore oil and gas facilities are mainly built using carbon steel, duplex stainless steel, or normal stainless steel. And there are certain methods and techniques that you use to actually preserve these metals from actually corroding. And corrosion is a big problem for any oil and gas operator, because corrosion detriments the asset integrity of a facility, and it could even lead to leakages, which is something of a big no-no in the industry, right? So these are the three main segments. As I've shown you, the power machinery is the biggest contributor for Deleum. The second largest is their oilfield services, and the least is actually the integrated corrosion services. So I briefly also went through their financial statements. They have a pretty strong balance sheet. But more importantly now is the growth. And this is where I'll share insights about what Mr. Rao actually said. So you already know, as I mentioned, that they have quite a monopoly in the power and machinery segment in Malaysia because of certain agreements that Petronas has put in place for all PSC operators. The second thing about their strength is really the monopoly of their slickline services within Malaysia. They north of 50%, and this is confirmed again by Mr. Rao during the briefing. What Mr. Rao is trying to do today is actually expand more and more into oilfield services, and to complement rather than to take out revenue contribution from the power and machinery. Because the struggle with power and machinery is this: you don't build a new platform in Malaysia like what we used to 10-20 years ago. There's certain reserves or certain oil fields within Malaysia that needs a totally new platform, but those are rare and far and few between. Not as much as what we saw in the 1980s and the 1990s, right? And you only need a power generator on what I call CPP, Central Processing Platforms, or the main platforms. What we see Petronas developing today are mainly what we call small satellite jackets. And these small satellite jackets are usually, the power requirement is really small. You can actually power them using solar panel, or you lay a cable, or you have a diesel generator running to keep the platform running, because of very low power requirements. Only those huge platforms that have living quarters, that have huge production equipment, they have pumps, that's where you need a huge gas turbine generator like what solar actually sells through Deleum, right? So knowing that, I think Mr. Rao knowing that there's not much new turbines to be sold, a lot of the revenue today is actually generated through maintenance contracts, because the installed base, he couldn't give me a exact figure, but it's somewhere north of 200 units within Malaysia, old and new. And going forward, a lot of these revenue generation for the power and machinery division would come from the after sales service, the maintenance of these turbines, refurbishment. And because of the installed base, I think it is something sustainable. because if these platforms continue running, they definitely need the power generators to be in tip-top condition. They used to break down what came from maintenance and what came from new turbines. In the most recent year, they did not share this. So I hope that by way of transparency and corporate governance going forward, they will share more and more of this, so that analysts or investors, we can actually kind of like forecast how big is the chunk if they don't build or they don't sell any more new turbines, right? On the integrated corrosion services solutions, if you most recently read in the news probably a few months ago, you noticed that they were under investigation by MACC because of a bribery charge. This question was also asked during the analyst briefing, how they're going to overcome it. The advantage was that Mr. Rao, and this was new to me, probably was not new to some of the analysts in the room, but this is new to me because Deleum themselves, the management actually reported the irregularities to MACC rather than MACC finding out about the case. So in a way, it was actually they blew their own whistle rather than someone whistle blew them. And I think that put them in good stead because MACC knew that there were a few bad hats within the company, not the bad hats was not the company itself. And they are pretty confident of reinstating their licenses that they were suspended because of this investigation. And I look forward to, for them announcing this kind of news because they feel that these are the contracts were somewhat not to their benefit as well because it was very low price. But even then, Deleum sees this as a diversification of their businesses rather than just relying on power and machinery. I think that's what Mr. Rao wants to quickly reinstate this business, even though it's a smaller chunk compared to power and machinery, but it helps diversify the revenue streams of Deleum, right? One other thing that Mr. Rao did highlight was also with regards to the capex plans of Deleum going forward, because if you look at the capex in recent history, they did not spend much on capex actually. I remember I was looking at the numbers before I went to the briefing. So if you look under cash flow, and if you look under capital expenditure here, you can see on average, right, they spend, so remember this is a company that makes what, probably at the peak 600-700 million in revenue. Yeah, so about 600 million, 500 million the year before. So on a revenue of about 500 million, their capex is actually less than 10%. At the peak was what, 47 million? Okay, so 2019 they did spend quite a bit, 62 million. And then last year, obviously, they did not spend much, 12 million. And year to date, 6.8 million. So Mr. Rao did indicate that going forward, he would be spending on new wireline equipment. He did not give a definitive figure, but he's roughly said about half a dozen, not wireline, slickline equipment new purchase of slickline equipment, so that they'll be able to better position themselves as the leading slickline service provider within Malaysia. Okay, so that's where the capex spend is going to be. He reinstated or highlighted a few times that a lot of Malaysian oil and gas players are in trouble today is because they were very asset heavy. They took on a lot of debts. And Deleum's advantage is it's a very service oriented business. The equipment or the assets they need to buy are slightly lower in cost. It's much lower in cost compared to someone like Sapura or who has to buy huge offshore construction vessels to be able to service their clients. Deleum's equipment are like slickline equipment. They don't come in the millions. They probably come in the hundreds of thousands in terms of US dollar terms. Their power and machinery division is actually selling something. So it's more like a trading business where they add on value by servicing, service contracts, training staff to be able to service within this region, so they don't need to fly a solar engineer out of US. So that's where Deleum service add or value add really is. So they're really trying to position themselves as a one-stop service center for either facilities engineering, topsides, and or well services. I think that's where Mr. Rao is trying to position Deleum going forward. Not going to take on too much asset-heavy equipment, too much debts as well, but just enough to get their equipment standard up to play, new, so that they don't break down. And I really do wish Mr. Rao well. I mean, he secured another coup. He managed to get Tan Sri Samsu, who was the former CEO of Petronas, to be on their board. So that's pretty interesting. He gotten the former CFO, Dato Sri George Ratilal. And he secured another coup, gotten Dato Samsu, to come over to the board. And I think from my perspective or my opinion, for someone like Tan Sri Samsu to actually come onto the board of a Malaysian listed company, I don't think they want their reputation tarnished. And, I could be wrong, but I guess that when you have someone of that kind of caliber into your board, there's enough check and balance. Corporate governance will be ensured to a slightly higher level. And hopefully these are the ingredients that will help propel Mr. Rao to bring Deleum to greater heights, So, but that's my opinion. I could be wrong. They do have an advantage of a very strong balance sheet to play around with for capex expansion and all that. And hopefully, one more very important thing, I can't imagine I missed this out. So their power and machinery division has seen a slowdown during COVID. Not so much because that they did not secure new sales or they did not have maintenance work, but because of the COVID restrictions, sending service personnel, a lot of this work has been deferred. And what Mr. Rao kind of hinted is a lot of this deferred work is going to manifest itself in Q3 and Q4 this year. And he gave a clear instruction to his team not to carry over this work to 2023. So I think it's beneficial for investors of Deleum as well, because they will try to shore up everything within 2022, recognize it within 2022, and not carry over to 2023. And because of the pent-up demand by a lot of these oil and gas operators that deferred a lot of this maintenance work, I think it would be a good short to medium-term booster for Deleum, especially with the huge install base of power turbines within Malaysian waters. So, watch the next quarterlies like a hawk. Mr. Rao keep on saying within that engagement, he says, I like to under-promise and over-deliver. So hope that goes true to this as well. So what can you conclude from Deleum's business model and in an environment where oil and gas today is really the survival of the fittest? Number one, as a service company, as long as you keep your expenses low, you don't over leverage to actually buy very expensive assets where you will struggle to pay financing costs and also to secure contracts that make meaningful cash flow, that spells actually doom. And we've seen this in companies like Sapura and companies like Serba and companies that have very, very heavy assets that require a lot of debt financing, and that will actually spell a detriment in any environment, especially in oil and gas commoditized cycles. Number two is there are certain companies that benefit directly from high oil and gas prices, commodity prices. These are companies like Hibiscus, which I've talked about in a previous video. Their business model is very simple. The more they produce and the more they can sell at a higher average selling price, which is the Brent price or the WTI price, average realized price, they benefit directly from these sustained oil and gas prices. Where service companies like Sapura, Deleum, or even Serba Dynamic, or even Petra or Dayang, which I'm not going to cover, I haven't covered in these videos, they are at the mercy of these oil and gas operators actually dishing out service contracts to them. So during COVID, with a huge lockdown, a lot of these contracts were actually delayed because it was difficult getting personnel on board, and Deleum, even with a strong balance sheet, they also suffered. But because they had a strong balance sheet, they were not tempted or were not persuaded to take on jobs that were not meaningful because they did not have the burden of paying financing. Like some of these guys, they had to take on jobs because they had debt financing on their assets, and they had to just generate cash flow just to pay the financing costs. So that's point number two. Point number three is this. In any business, the quality of management plays a very important role. Whether you take on unnecessary risks, whether you take on debts that were not beneficial over the long run, and how do you preserve the balance sheet, be conservative, and yet still generate cash flow for the company. Those are the qualities of management I try to look for, not just in oil and gas, in any industry, and how smart they are in allocating capital or even taking on debt. So I see healthy, Mr. Rao has definitely benefited from taking over a strong company from the previous management. And I think he has a strong footing going forward, but he should not rest on his laurels, even though he inherited such a strong balance sheet. I think if you look at any oil and gas company in Malaysia, it's very difficult to find companies with such a strong balance sheet, especially in the service business today. So kudos to the previous management of Deleum as well, handing over such a good condition for Mr. Rao to take over and elevate the company going forward. And last but not least, if you found value in watching whatever I shared with you today, adding on with my experience of an oil and gas engineer, hopefully you've thought differently about how different companies within the oil and gas value chain works and how you could better your investment decisions. I would appreciate a like, give me a subscription, share this with your friends and family. For those of you who feel they can benefit from learning more about businesses within Malaysia. And I look forward to seeing you in the next video. Ciao, guys.